Of Canada's 31 critical minerals, 6 high priority, which are lithium, graphite, cobalt, copper, rare earth elements, and nickel. Martin Turenne is CEO of FPX Nickel. Welcome back to Kitco, Martin.
Nice to see you, Michael. Thanks for having me back.
The last we talked was about 6 months ago. What have been some highlights at FPX?
Yeah, there's been a lot going on. I mean, we're well through a preliminary feasibility study. That'll be done in September. But perhaps even more exciting has been everything going on strategically for us. So last December, we took on a new strategic investor who owns 9.9% of us. We haven't disclosed their identity to the market, but it's just a large corporate group, which we're really excited about their investment. We've also struck a joint venture with JOGMEC for global exploration for the awaruite nickel that we're focused on. We received some funding from the federal government of Canada under the critical mineral strategy. And most recently, we took on another strategic investor, this time from Outokumpu, which is one of the largest stainless steel companies in the world, who invested at a 40% premium, again, to own 9.9% of us. So it's been really exciting on the strategic front.
A lot to tease out there. Let's talk a little bit about downstream first, because there's been a lot of developments in that space. I'm interested in getting your thoughts, Martin. You announced during a PDAC demonstration plant, and you had some federal funding. What's that about, and what's the status?
Yeah, so we were one of the very few companies to receive money from the federal government under their critical mineral strategy for ongoing research and development and demonstration of critical mineral production that would keep that value add here in Canada. So for us, it is a pilot plant to scale up, one, the main mineral process flow sheet for the production of concentrate, and number two, also piloting the production of nickel sulphate production. So nickel sulphate is the chemical that actually goes in the cathode of the battery. There's no current production of nickel sulphate in Canada or indeed anywhere in North America. So I think the government sees our project as a potentially significant opportunity for the development of the first or one of the first nickel sulphate refineries. And we think our feedstock, our concentrate, is ideally suited to doing that. It's a very clean product. It doesn't need to go through the smelting stage. So it can be more directly vertically integrated downstream to produce that battery grade sulfate chemical. So that work will really start in earnest here in the coming weeks with the piloting of the flow sheet for the concentrate. And then later this year, we'll get into piloting the actual refinery piece for the sulfate production.
That piece has to do with the types of rocks that you're focused on, Martin?
Yeah, it is a novel or different type of nickel deposit, but one we think that can be very disruptive to global nickel supply. So the nickel is not in a sulphide, which you typically find in Canada or Russia, or in a laterite, which you typically find in places like Indonesia. The nickel is hosted in a mineral called awaruite, which is an alloy of nickel and iron with no sulfur present in the mineral form itself. We're the first company to have ever discovered an economic deposit with a primary speciation of nickel is in this particular form. We think there's huge advantages from a processing simplicity standpoint, from the cleanliness of that concentrate product, and for the ability to kind of more easily get vertically integrated into downstream uses, either in stainless or batteries. That really speaks, that ability to kind of vertically integrate into the battery supply chain really is the basis for JOGMEC's investment, or JOGMEC's joint venture with us. They're a Japanese state agency. They're entirely focused on trying to find new sources of nickel for the Japanese auto industry, and they see awaruite as this disruptive new supply, which we certainly concur with.
Now, talking about advancing the project, I was diving into the presentation that you had. You had a lot of benchmarks against comparable mines, comparable projects that are being developed. What were some of the highlights, Martin?
Yeah, I mean, at the end of the day, what we look at is what does it take to move the needle for a major mining company to want to acquire a development stage base metals project, whether it's copper, zinc, nickel. Those criteria tend to be the same. One is sort of the scale. Obviously, they need something that is going to move the needle from a revenue and a free cash flow generation standpoint. This operation would produce over 100 million pounds of nickel per annum, but $1 billion per year of top line revenue potential, That certainly moves the needle on scale. Secondly, they want long mine life. Mine life here will be 30 to 35 years. That gives the exposure to multiple up cycles in commodity pricing. Thirdly, they want low cost profile. And, you know, on our 2020 PEA, we would have been placed certainly within the bottom quartile of operating costs on a cash cost basis for the nickel business. And finally, and I think something that's emerging as it just almost as important a criteria as the other three is the sort of the ESG profile. And that speaks to things like the carbon intensity of metal production, the opportunity for kind of really, you know, respectful labor practices, highest environmental standards. Working in BC, working in Canada, that is part and parcel of what our project is all about.
Martin mentioned you are based in British Columbia, the north, and then that's giving you access to the hydropower up there, which gives some advantage in terms of moving the project. It is a left-leaning provincial government, though. It is the NDP. Fraser Institute wasn't too kind when it was ranking BC in terms of being a place to actually develop or being supportive of mining. What's been your experience?
Yeah, first of all, in the Fraser Institute study, I honestly think that that's a deeply flawed study year to year. I think it's based on a very kind of small sample size of respondents. And I think there's serious kind of just issues in how that study is put together. So I actually don't put a lot of stock into it, being somewhat familiar with how that study is actually put together. You know, BC, even under the NDP government, I think it's been across the board. There's been a positive sort of response to the mining industry, to how the current government has treated the mining industry. And I think, you know, that's something that I hear consistently talking to colleagues who are active in the province. And all you have to do is look at the activities or the strategic moves that some of the largest mining companies in the world have made to come into BC over the last several years. You know, Newcrest, Newmont, you know, Freeport being very supportive of early stage mineral exploration. Teck, obviously, you know, being a longstanding kind of champion of mining here in BC. A lot of interest that we see from major mining companies who, when they think about a project like ours that's located in BC, it certainly is something that raises any red flags. And of course, in actual fact, it's actually viewed as a strong positive vis-a-vis some of the other jurisdictional options that those large companies have.
Let's step back and look at the broader nickel industry. There's been a lot of announcements. You were talking previously about what you're doing with the pilot with the federal government, but there's been a number of downstream production announcements. So I think of Lynas with this rare earth down in the U.S., Piedmont also in the U.S. developing some lithium conversion. What's been notable in the nickel space, Martin?
Yeah, you've seen some investments by Stellantis, for example, into some Aussie or Australian-based and Aussie-listed nickel project developers. You know, I always say that one of the most interesting parts of my job is the engagement with the OEMs and with the battery companies that we've had over the last 2 years. From a commodity preference standpoint, I would say the lithium is clearly number one. Nickel is kind of number two on that list. And then from a time frame standpoint, a lot of these OEMs still do not know where their raw material units are going to be coming from in the years 2025, 2026, 2027. So they're still very much focused on projects that are either currently producing or that can come into production in that window. But, you know, of course, they also have to have their eyes on that longer term and where those raw material units are going to come from. You know, the impact of the Inflation Reduction Act and what that means for sort of prioritizing sourcing of materials from the United States or from free trade allies. That is hugely important to Canadian and Australian nickel projects that are of course free trade allies of the United States. I don't think investors are paying enough attention yet to the inside lane that gives Canadian and Aussie projects to really fulfilling those OEM requirements in a way that's going to allow them to access those subsidies to the maximum extent for their vehicles.
Now, you know, and our friends in the gold space will always talk about M&A and how that is going to be a lift to that market. So talking about Newmont and Newcrest, for example, there's been some notable M&A that's been happening. So I think of what has been happening with the Australian markets, and then also the fight over Noront up in Ontario.
Yeah, we have seen some of the first, let's say, inning of M&A happening in the nickel cycle, or in this current nickel cycle. You saw Oz Minerals being acquired by BHP in part for a nickel development asset that's in the Oz.
That was the one I was searching for.
Yeah, the Noront deal. And so, yeah, those are kind of, the Oz one was very kind of strategic to BHP given its location. Again, the Noront one was a very particular situation that was well documented, kind of historic rivals there fighting over that asset. And certainly in our discussions with large diversified companies, you're seeing a lot of interest in nickel from those groups. For many, many years, nickel was a four-letter word when it came to sort of corporate development within the large diversified companies. There was a time not that long ago that BHP was talking about divesting its nickel business entirely and getting out of nickel. And now they're very much on the front page talking about nickel being right there with copper as a primary, commodity of interest. The interesting thing is that, once the nickel assets really start going off the board, there's not that many of them at an advanced stage. And certainly we think we'll factor very high into that priority list.
Now, nickel is going through a bit of a rough patch right now, Martin. Indonesia reportedly is producing more nickel than the market can absorb. Last checked, I saw prices at about 21,000 a metric ton, or about $9.50 a pound.
Yeah, I don't think of it as a rough patch at all, Michael. I think that's actually a pretty robust price. Almost all the cost curve can make money at that level. And it's still one that supports sort of wide and expanding use of nickel in stainless steel and in batteries. So I think of the sort of nickel in the $9 to $12 a pound range as sort of a Goldilocks zone, where it doesn't have any dampening impact from a demand standpoint. But for operating mines, or certainly for projects, they should be highly profitable in that range. And if you need a nickel price much higher than that, then you may have to wait for the next cycle for your project. For us, as we move into a pre-feasibility study, we'll likely be using a nickel price below that range, and that just really speaks to what we think is the robust sort of economics of our project.
Now, you spun out CO2 lock a while ago, which is using rock to bind and remove carbon from the atmosphere. Can you bring us up to date with what's happening there?
Yeah, so CO2 Lock's been very active. It was formed about a year ago now, so it's been a busy year for Cooper Quinn, who's running that, and his colleagues there. There's sort of two main aspects to sort of the strategy of CO2 Lock. One is actually securing mineral title and doing exploration to find the rocks that are most prospective and have the highest content of the magnesium minerals that react the most quickly with CO2. So looking for rocks that are high grade in those CO2 reactive minerals, and it has its flagship already, a project called SAM in central BC, south of Prince George, that has some very, very promising surface samples that have been taken there that show highly prospective terrain. The second piece is really, understanding that kind of path to commercial viability for standalone CO2 sequestration or CO2 mineralization properties. So once you have the property, what does the engineering look like to actually introduce CO2 in a concentrated form to these rocks to maximize sequestration? One is to actually introduce the rocks into the subsurface, so to do in situ injection of the CO2 and have that mineralization happen below the surface. Or second is the ex situ model, where the rocks would actually be mined, and then the CO2 would be introduced to the rocks once they've come to surface. And so all of both the geological work and engineering work is progressing well. This is really fundamental R&D that's happening, but there's a real progress and pathway to commercialization here that's going to involve economic analyses, technical advancement, and test work to ultimately get as the next major milestone would be sort of a piloting of this technology.
Now, could you, as you model this out, is this a type of is this a type of reaction would be occurring actually while a mine is undergoing at the same time? Because it would make sense because you're moving around rock.
Yeah, so this idea of carbon mineralization is one that does have its basis in some work that we've been doing with UBC going back now over 6 years, looking at the ability of a mining operation that is mining, let's say in the case of Baptiste, potentially mining for nickel one day, that at the same time as you're extracting the nickel, you're also exposing the minerals that react with CO2 naturally. So the byproduct in this case of the nickel production is the exposure of carbon reactive minerals like brucite. And to the extent that that brucite can be exposed to CO2, you can be generating significant amount of carbon sequestration, which lends itself to the potential for monetization or otherwise just generally reducing the overall footprint of CO2. So it can be this byproduct with respect to existing nickel operations or planned nickel operations like ours, or it can be a process whereby the primary product is those carbon reactive minerals, and the primary purpose of the mining operation or of that geological operation is for the introduction of CO2 and sequestration of CO2, and maybe extraction of other minerals in that case is actually the byproduct.
I'm kind of wondering about going to market with this, and I understand right now that you're engineering this out, Martin. But it seems like there's such a variety of novel ways for doing this carbon capture, this carbon removal. So Charm Industries, for instance, using corn waste and putting it down into wells. I see that Microsoft actually signed up with a firm that is doing, how would you say, plants and then, or types of plant material and then sink it into the ocean floor. So I'm just kind of from a customer's perspective, kind of understanding all of these potential types of solutions. How would you go to market?
Yeah, I think in this case, it's really sort of the market of emitters is looking for an all of the above type of approach to solutions, right? So there's a bunch of solutions, including the CO2 lock solution, that are in research and development right now. And there are really interesting pathways for, first of all, obtaining funding to continue that R&D. But the commercialization pathway here for CO2 lock is relatively clear. There's great emerging technologies around the capture of CO2. Let's say capturing it from atmosphere. The big problem is the storage. Where do you store the CO2? And with some of the other solutions, there's some question as to whether and how long or how permanent that storage is. For example, if you plant a forest of new trees, yes, you're going to capture CO2 with those trees, but one day those trees will die a natural death, or they'll burn up in a forest fire, and that will have cause for the re-emission of all that CO2 that had been sequestered in those trees. Here, with the geological solution, that sequestration of CO2 is permanent. And so that should drive much higher value credits, which should then enhance the top line revenues for these types of operations.
Lastly, Martin, milestones over the next 12 months at FPX.
Yeah, the next really significant milestone for us is completion of that pre-feasibility study in September. We're really looking forward to that. I think that, having done a PEA in 2020, it's been almost 3 years now since that study was published. We've obviously seen with both studies and mine builds over that span of time that inflation has had a fairly damaging effect on the economics of a lot of projects. And I think a lot of people are maybe looking at projects like ours and say, well, what will that impact of inflation be, and how economic can the project be on the other side of the sort of the pandemic-induced inflation? And we're feeling very confident about our ability to show very robust figures in that PFS, reflecting the last 3 years of intense engineering work that we've done, and that I don't know how well understood it is how much more engineering goes into a PFS versus a PEA, but this will be a very robust engineering document, and one that I think sets us very clearly on the next steps to feasibility and beyond. So really excited about that as the next major catalyst for us.
Martin, we'll keep an eye on September.
Thanks a lot, Michael.
My name is Michael McRae. You're watching Kitco Mining.